Hello, trading is closed on January 20th, 2021. We always start with our disclaimer. Why this moves after I set it, I'll never know. In any event, this is my call for tomorrow, January 21st, 2020. No guarantee I'm right, and anything other than calls from the MEJT system can't have the same level of accuracy as the system does. Trade at your own risk, and my address is mejt.trades@gmail.com. Had a few calls. Look for the pattern with the early low. Tends to be a rally day with a fine lower high. We got that. Tomorrow also has early low. There were a few upside price targets we had, all of which were met today with the new high. Had this 38.1866 target from the 14th of January that printed. We also said that the hole in the wall gap we had last week had to fill some time. Typically there's some resistance over the high of the wall, but that didn't manifest today. This is just a reminder of what we said. We said gapping and overtaking the highs. Should that happen, which it did, I don't have anything requiring the recovery to stop. Well, it's more than a recovery, it's a new all-time high. During the day, MEJT said this rally and these drops weren't going to stick, and we've already had the retracement. Rallied all day, closed under all these highs, leads to lower prices if these highs don't fall early. They're not too far away. Futures are up as I'm recording it. Shouldn't be too hard to do if the market intends to go higher. But if we don't take this high out early, we should see lower prices. Ideally, we should gap over this if the rally is to continue unabated because there's strong resistance at this high. You can connect these lines, and we stopped right at the line, and it's also a Fibonacci target of the prior consolidation. Now the way I'm counting this with the red count, we still have an ideal target around 39.20. Doesn't mean you have to go there in a straight line. So if that is the right count, and of course we don't know that at this time, we still have a ways to go. Just remember, we're at resistance from this trend line. We're at Fibonacci resistance, and if the gray count is correct, and I don't know if it is or isn't, if that's the right count, you can explain a drop at any time here. Ideal for the rally to continue is to gap over today's high. Tomorrow's pattern has early low, doesn't mean you won't gap up. The day-long rally closed under the, it should be under the midday highs. It's more like it closed under the midday highs after hitting resistance from that trend line. Market needs to overcome this resistance promptly or lower prices should print. Doesn't mean we have to close lower. Gapping over today's high would be the ideal situation if we're going to continue going up. Sentiment indicators have been in rarefied air for nearly 3 months. That's a long time. We've traded over the monthly Bollinger Band for 6 months. I don't see any precedent for that. These clearly are signs of excess, but it doesn't require the rally to have ended here even if we drop tomorrow. The 39.20 price, my next area of resistance. Once again, someone's going to be smart enough to call the end of this move. It isn't going to be me, probably. Just remember, no matter how good things look, this is an overlapping move up. That means it's part of a corrective pattern. At some time it should correct, but it doesn't mean it has to correct right now. Here's your resistance. All you need to do to overcome resistance is to gap over the high. If you gap over the high, I still think we trade higher. But at this point in the pattern, any strong move down, which I'm not predicting one way or the other for tomorrow, any strong move down, once it breaks support, has a long way to go. So tomorrow's open should tell the story if this falls or not. It's a pattern with the early low, and that's today's call.